Thank you for staying tuned on Rest TV. I welcome you back from that sports update from EK, the Ugandan. And now, of course, I'm Jackie Larry to update you what is happening in the financial sector of Uganda here on the Financial Eye, where we update you of anything that is happening in the economy that could affect you either positively or negatively. Now, of course, as we all know, that taxation is one aspect that will shape a country's economic landscape. One of the key issues that we have in this new the current national budget is that there are new tax measures that were implemented or they were stated in the new national budget that have caused an intense debate among citizens, among business people, among so many technocrats who are out there, who are, some of them are part of the government, some of them are not part of the government, and they're wondering, are these going to affect us or impact business decisions? Are they going to impact the job creation aspect? Are they going to impact investment decisions as a whole? And now, so tonight we have decided on the Financial Eye that we will be discussing a key critical issue, that is the impact of taxation on Uganda's economy, and we are focusing more on how these changes will affect businesses as well as the citizens at large. And I'm not alone on set. I have technocrats for Ministry of Finance. He's a tax advisor, Mr. Paul Lakuma. You're very welcome, sir.
Good evening, viewers.
We are very excited to take us through the insights of the tax policy development in Uganda. We need to discuss more in depth of how, Ministry of Finance is really approaching the tax regime and changing most of the things that we have previously known. And I know it's for the better for the Uganda, for Uganda to develop as we see the vision for 2040 as Uganda, as we're trying to move away from a peasant economy to an industrialized economy. All these policies that were cited, I'm sure they're for the better. But of course, that is why we have a Financial Eye, such that we can discuss and know some of these policies for the government, are they going to benefit the Ugandans, even the least Ugandan out there? So you could just introduce yourself to the viewers and just explain what you do in Ministry of Finance as we go ahead in the discussion.
Yeah, good evening, viewers. Again, my name is Paul Lakuma. I'm a DRMS specialist with the Ministry of Finance. I advise on tax policy and administration. I also coordinate the domestic resource mobilization strategy, among other roles. Yep. Okay.
Mr. Lakuma, yep. We are very delighted to have you today. Before we go in depth of the new measures that were cited in the current national budget, could you just take us through the tax policy development process and how the government sits down and, says, let us do this, and evaluates the impact of this tax policy before administering it in the country?
Yeah, the tax policy making process, it's like any government process, has a strict calendar, and it adheres to the broader development objectives of the government as outlined in the National Development Plan. Now we have the 4th National Development Plan. We pick the broader development agenda from there, and then we do make consultation with stakeholders, that is the public, opinion leaders, business leaders, academia, and political leaders. After we have made consultation, then we ask them to make proposals of what measures they would like us to implement in the coming year. After those proposals have been made, we go through a very rigorous system where we do a lot of research and analytical work. It's a data-driven process, which informs us on the possible revenue gain from implementing such policy and administrative measures. But also, it doesn't end there. We look at economic impact. How will these measures impact on efficiency of the economy? Equity, the distributional impacts across the different income groups, and the and the different segments of the economy, the different sectors. We also analyze. I've mentioned that we analyze how it's going to affect the efficiency of the economy, the distributional impacts in terms of welfare impacts for the different sizes of businesses and different sizes of households. If there's a meeting of minds on that analysis, then we draft the bills and then we submit them to the legislative we subject it to the legislative process, that is through Parliament, where the bill goes through evaluation, which is informed by the political economy of the country, but also the technical and internal validity of the proposal. Then Parliament will go through its processes, which includes voting on the bill, and then the bill becomes a law, and then it's accented by His Excellency the President. Then it becomes operational.
Okay,
yeah.
So now following the current national budget 2025-2026,
yes,
what new measures have been put in place? Tax measures.
I'll cite a few cases. The first is the 3-year tax holiday, which is very popular.
Okay.
This is where the
income tax holiday.
The income tax holiday.
Okay.
The 3-year tax holiday, where we intend to exempt small, medium, and micro enterprises with investment below 500 million from paying income tax for 3 years.
Okay.
This will relieve the tax burden, but it will fulfill other objectives such as provide employment, create, invigorate entrepreneurship especially amongst the youth, but also incentivize formalization of farms. As you know, we have 2 million farms in Uganda, but barely north of 120,000 farms have fidelity to the law, either registered by URA or registered by URSB. We hope this measure will net or bring in a good number, certainly not 2 million farms, but a good range, like 500,000 farms. We expect them to register and become formal and begin accessing credit. There are advantages of being formal: accessing credit, accessing government contracts, being in the network of bigger farms, an opportunity to learn how to export, learn how to do business, keep records, create value, create employment. Those farms will move from from employing household members to employing an extra person, and that's a win-win for everyone in the economy. So those are some of the positive attributes we expect from the 3-year tax holiday. We are also
before we move to the next one.
Yes.
There's some questions that are out there for many Ugandans when this tax measure was mentioned, especially by the president himself during the national budget reading. And they were wondering, in terms of tax evasion, how will this be controlled for that particular kind of tax measure? Because we're looking at a Ugandan who will come up with a new business to make sure that they are not paying tax for 3 years. And after, they will change to another business and they will close this one. So how will you mitigate the people who kind of avoid paying tax?
Yeah, the Ministry of Finance is a very clever organization with very clever people who have thought about through a character, and that farm will be penalized. Some of the penalties are quite prohibitive. One is to refund the 3-year, the estimated 3-year holiday, to refund the tax which was forgiven for the last 3 years. That's one of the penalty. That should act as a deterrent. Also, we will require these farms to be registered with EFRIS in their dealings, in their dealings of dealing with vatable supplies. So that's another set of record of such farms, which will be very prohibitive of or prevent mutation. This will be a very data-driven process where we will monitor farms which, like I mentioned, we will track the network of this farm. So if the same farm is dealing in the same network, it's most likely that this farm just changed character. This measure will also be sector-based. So certain farms in certain sectors dealing with certain suppliers, dealing in the same goods, but the name has changed after 3 years, then that's an indicator that that's the same farm.
What if it's not the same kind of business? What if after 3 years, I operated a saloon, I close it up, then I go to a butcher shop?
But that's costly to the business. You know, when you change from saloon to butcher, that's a loss of skill. It's also costly to the farm. It's not like mutation is easy. It's not easy. It's also costly to the farm for you to change from a supplier of cement to now cooking tea. You need to learn skills. You need to relearn skills of cooking tea. It's not like mutation always gives a farm advantage. Also, as I mentioned earlier, a farm mutating from one state to another has some business cost, and it's only the high-risk farms which will do this. I'm not saying there will be the success rate of farms which are mutating will not be there, but that success rate will be very low. Okay. Mostly because of the measures which we have put in place. One of them is all your dealings must be receipted in the electronic receipting system, and if you are dealing with excisable goods, you must be on the digital tax stamp. That's a trail of record of which will prevent mutation.
Okay.
Yeah.
So you could go ahead and tell us some of these key new measures in the current national budget.
Yeah, we have provided a reprieve for those persons who have a penalty for a period of 2 years. Those who have defaulted on their taxes from July 2024, we have provided a reprieve up to July 2026. This will ease the burden on those businesses, especially the ones which were genuinely burdened. But this reprieve applies only if you pay your principal, then we forgive the interest. So we have done that for the last 2 years, and it has helped us also. It's not that it gives only advantages to the taxpayer, but it has given an advantage to us also. We have been able to collect additional revenue in the tunes of a couple of billions. So we feel this is we should extend this amnesty further for a period of 2 years again.
Okay.
We have removed digital tax. We have removed stamp duty for registering agreements, land sales, and memorandum of understanding. This will ease the cost of doing business. but also will improve on administrative measures. Particularly, we still require that the agreements be registered, but at a fee of 0. But this will ease on the burden of paying the fee. The fee looked little, but it had a burden. Particularly, let's say you are an employer who employs 20,000 people. Let's say you have a factory, 20,000 people, registering each of those agreements. Even if the fee was 15,000 or less than that, imagine 15,000 for 20,000 workers. That was quite a burden. We have eased that burden in the coming financial year, but we still require the agreement to be registered for it to be enforceable in court. There are other administrative advantages which I could mention. One of them is the administrative units will be able to collect information which we use in our analytical work to understand the taxpayer better and to understand the trends in the market and where the business is. So it's a win-win for the business sector and for the tax collector and also for the government.
Okay.
Yeah.
So now for the people who are vulnerable,
yes,
or the low-income earners, are there any form of exemptions that have been put forward in this national budget?
Yes, as I mentioned, there's the stamp duty which we have removed that will mostly benefit the vulnerable. It will increase the rate of employment. There were employers who did not want to employ, especially casual workers. A lot of them, because of the fee, which looked small, but it would be prohibitive, especially if you're dealing with a big number of employees. There's 3-year, there's no need even to mention the 3-year, speaks for itself. But broadly, the tax system has pre-existing exemptions which benefit which enhance the welfare of the lower classes of this country. As I could mention a few. We don't tax education. We don't impose a VAT on education. We don't impose a VAT on menstrual pads and menstrual cups. We don't impose a VAT on diapers, agricultural supplies, milk, exports. You know, that's every good tax system doesn't tax exports. Educational supplies like pullover, uniform are also exempt. So there's a broad range of exemptions on 0 ratings which benefit the lower classes or the vulnerable, which enhances their welfare at the household level.
Okay.
Yes.
So for the small and medium enterprises, I have been among many out there who are complaining about the IFRS system. Most of them are having hardships in how to use the IFRS system, but is there any form of enlightenment from the ministry or education that is adding skill to the informal sector to embrace these new changes, much as they are good for us to get revenue from, but then we need some form of skilling such that people do not feel as though it's burdening their businesses. So is there any form of free education on how to use such systems? Yes,
we have an elaborate tax education program. Of course, there's a scope for improvement. This year, we plan to enhance the education programs. You know, to Jenge Bus with URA. You know, URA has a TV, where URA staff appear regularly to explain and to clarify on tax administration and tax policy. The Commissioner General of URA writes regularly in the New Vision. He has a column every week. That will also reach out to the masses. We plan to expand more, speak more on the regional radios. A lot of tax amendments, tax procedures, administrative procedures are published in local languages, especially Luganda and Runyankole. We plan also going forward. At the ministry, we have come up with tax explanatory notes. This year, they're in English, but going forward in the coming years, we will have them in the local languages. We consult stakeholders. Unfortunately, we can't consult everybody because of the time constricts of the law. I told you the tax making policy has a very strict calendar. By April, everything should have been settled.
April
of the coming year. Everything should, the parliamentary committees should have gone through the bills and appraised the plenary on the way forward.
Okay.
Yeah. So we have a very strict calendar which starts in next month, which begins tomorrow, and go through the cycle. So we can't consult everybody, but we plan to engage the media. The media is a big partner in this tax policy and narrowly and broadly development policy of government and in fulfilling government objectives. The media is a great partner, and I hope we can continue engaging, because you shape perceptions and you have a further reach than we do. So going forward, we hope we can work with the media much more. Also the civil society in explaining the different government policy, academia in doing the research to establish the impacts, and both in the ex ante and ex post, before the policy implementation and after the policy implementation. That analytical work is delivered by academia. So you can see the tax ecosystem is not only URA and Ministry of Finance, but involves a wider range of stakeholder, and involves a lot of stakeholder engagement in clarification, but also learning. It's not like we are perfect. We also sometimes listen to what is on the ground and make corrections.
Okay. Yeah. So now, following the key priority areas cited in the national budget, of course, we have agro-industrialization as one of the main.
Yes.
What are some of the tax measures that have been put in place to make sure that the mode of operation or the cost of business in terms of doing agro-industrialization is lessened, such that the burden is not really felt for the person who wants to invest in that sector? We,
as you know, in the past and in the current law or the continuing laws, the laws which are still active, we have provided a lot of support to agro-industrialization and tourism and mining, but we plan to even enhance that much further, especially in the coming DRMS, which is 25, 26 up to 29, 30. But in the existing DRMS, we have provided a lot of
DRMS
is domestic resource mobilization strategy. We have provided a lot of support. I can enumerate some. There's no VAT or import duty on trucks or plant and machinery for agro-processing purposes. Importation of cars or vans meant for tourists, like a van, like a drone, meant for tourists, is also...
Drones are not VAT inclusive?
Yes.
They're exempted from...
They're exempted from import duty.
If I say it's for tourism?
Yeah, yeah. If there's proof that it's for tourism, not only saying, but we know the people who deal with tourism.
Okay.
Yeah, that is also exempt. We have provided support for strategic investors, especially those who invest in hotels. We have a special program for them, which eases the burden caused by import duty for tiles, tables. As you know, the hotel industry is quite highly regulated and adheres to certain standards. So it's not like we are trying to promote tiles from another country and leaving the ones we produce here. But you know, if you're going to trade under the, I don't want to drop names, but to trade under some brand names, you know, the big brand names, the Sheratons, Hiltons, and Serenas, there's a standard they expect you to have of the furniture, the tiling, the lighting, the paint. So we have eased that burden so that we can attract tourists, which is now a $2 billion US business, which we hope to enhance or double or triple in the next 5 years, because it will create a lot of value in terms of jobs for the youth and foreign exchange, which facilitate in providing essential inputs. For now, energy inputs, as you know, those are mostly importable. But as you are aware, we are on course to produce oil in the coming future. Yeah.
Thank you so much. Those of you who are just joining us right now, we are on the Financial Eye, and with me, I'm with Mr. Paul Lakuma from Ministry of Finance, Planning and Economic Development. He is a tax advisor. He's taking us through the new Uganda's tax regime and the new tax measures that were implemented in the National Budget 2025-2026 and how they will impact the economy, most so businesses and citizens in Uganda. So stay tuned on Rest TV for more. We'll be going for commercial break. We'll be right back.
The Financial Eye, making finance clear. No complicated terms, just the economy explained. The Financial Eye.
Welcome back to the Financial Eye with me, Jackie Lingler, and we continue to delve through the taxation system of Uganda and how it's impacting the economy at large, more so the businesses and also the citizens of Uganda. With me, I'm with an official from Ministry of Finance. He is the tax advisor, and that is Mr. Paul Lakumo. You're welcome once again.
Good evening, viewers.
Thank you for taking us through all those valuable insights about the tax system and the policy decisions that Ministry of Finance has put forward to see that the economy is structured towards the tenfold, like the vision itself. Now, as we move forward, as we migrate from how the tax changes affecting businesses. Now, I need to know to the normal local citizen of Uganda, how are the standards of living going to be affected by these new tax measures in terms of the price of the commodities that the people are buying, and then also in terms of the goods and services that are provided to the people?
Okay. In terms of prices, we did not change the VAT system, so a lot of prices will remain stable, albeit with, of course, considering inflation, which is another macro variable, which is out of our control as, not out of control of government, but out of control for us tax experts. Although we work in collaboration with the monetary policy aspects of policy making, but taxes, we expect them to remain stable broadly, enhancing consumer welfare. Of course, we have made a modest change in excise duty for accessible goods, such as beer and cigarettes. Why have we made that change? One is for the past 5 years we have not made any changes in the prices of those goods, and inflation has changed by more than twofolds, more than 20% in those 5 years. So we need to make the price of those goods move with inflation. Otherwise, then they will not match the region, and it will encourage smuggling. So we want to stop smuggling movement of goods. If they are cheaper here than in the region, then there's it makes it attractive for it to be moved from Uganda to another country, affecting the supply. And that would, if the supply is lower than demand, prices will go up. Yeah. So it's wise to increase the price to harmonize with the region. And in that way, you collect some little revenue, which can be used for other programs such as health and education. Secondly, these are harmful products with a heavy health cost, cigarettes, particularly cigarettes. The government incurs a lot of bills in treating cancer and other respiratory diseases which are related to tobacco use. So this tax discourages. It will not entirely eliminate the use of those products, but it will discourage a majority, and it will lower the burden on expenditure side, on expenditure on health provision. So that tax will address that externality or that aspect of or the health bad which is caused by tobacco use and alcohol use. So we have increased the price of cigarettes by imposing an excise duty on it, and we have also affected the price of beer by increasing a price on that. But that increase has been very modest. We are also, even the people who smoke and drink are still citizens of this country. It has been modest, just to discourage the young students, people below 18, from engaging in this kind of behavior. That's why we put a wedge on the price of those two products. But otherwise, everything else remains as it was. All other household products, cooking oil, bread, sugar, tea leaves, coffee, we have not touched it this financial year. Everything else remains as stable. Even fuel for cars, petroleum, diesel, we have not touched it this year.
For the Ugandans.
So the consumer household prices will remain very stable this year.
Okay.
Yeah, apart from cigarettes and beer.
Okay.
Yeah.
So for the Ugandans who are watching us, not all of them, know these other taxes that you're mentioning.
Yes, yeah.
Yeah, not all of them. But of course, we might not have enough time to explain each of them, but at least we can get into details. The most common one, which is VAT, value-added tax. I want you to explain in detail what value-added tax is and who is eligible to pay it. And why should a Ugandan pay it? Because at the end of the day, most of the times we are told to pay the tax, but Ugandans want to know, are we benefiting from what, do we just comply and wait because we're Ugandan citizens, but do we benefit in a long run as Ugandans to comply with the tax that has been put on table?
Yes. VAT, as the name suggests, is a value-added tax. It's a tax on value addition. The value addition here is supplies minus intermediates. That is what a factory produces minus what it is incurs in cost of producing that item. Like if you want to produce coffee for drinking in an hotel, you have to have the coffee, which is an input. You have to pack it. The packaging is an input. So you are allowed to deduct the cost of the packaging and the cost of coffee. The difference between the price you charge the final consumer and the cost you incurred is what we impose 18% on. We impose percent on, you could think of it as a profit. Okay. Yeah, the difference between your price and your input. The difference between that, we charge 18% of that. Okay. That is value added. This 18% should be borne by the final person. Everybody in between is eligible to claim back the 18% they paid on the product, if at all they are registered. Okay. They are VAT registered. Now, the registration comes with a little bit of burden. The burden to withhold the tax and to make accountability to the revenue administration at the end of the period. The end of the period for VAT is a month. So every filing month, the mid of the month, because on the 15th, you have to file your VAT receipts. So to ease this burden, because it's costly on the small taxpayers, there's a threshold. The threshold is 150 million. So farms with consolidated prices, which we call output, consolidated prices for the various things they are selling, consolidated, not for only one item, but for consolidated for the various VATable items, worth less than 150, from 0 to 150 million, are encouraged.
Annually, is it annual?
It's an annual threshold, annually. So you see, a lot of farms would qualify in an annual. maybe a lot of farms, maybe a third of farms in Uganda would qualify. So farms with output or consolidated prices worth that amount are discouraged from registering, or I encourage, let me use a positive word, I encourage not to register. Yeah, because it will be burdensome. Okay. Yeah, but you could apply to the Commissioner General and ask to be included. There are advantages also of being included.
Could you just give us, highlight for us just a few of them?
One of the advantages.
Why would I go to say that I need to pay this VAT?
Yeah, because now you are in the network, you do business with big businesses, you are a supplier. Big businesses are afraid of losing their VAT chain because the chain has receipts. Every part of the chain has receipts. These receipts are used as evidence to claim a refund or an offset. A refund is anything above 5 million. An offset is anything below 5 million. An offset, you subtract it from your tax liability. A refund is anything above 5 million. You can get money, cash money, in your account. You show the receipts. URA will refund to your account for the input cost for the input VAT you paid. Now, that's the advantage. The big firms would only want to deal with someone who will keep a trail of receipts.
Okay.
Yeah, that's the advantage. Then you get to do a lot of business. You don't break your network. That's the advantage of being registered. Okay. Yeah, but there's a burden of having to, you'll be audited. You need to keep records. Sometimes it's not worth it for a small business to incur those costs.
Okay.
Yeah, but if you are an IT company, IT companies, I'm just giving an example, where you are just one person, but it's a billion shillings company. I think it's advantageous to be VAT registered. Yeah. Okay. Yeah.
So how is the Ministry of Finance going to make sure that they measure the effectiveness of these measures that have been put on table?
Yeah. Over time, we have put in place capacity to evaluate these measures, a very elaborate data-driven process, which evaluates the distributional impacts, that is impacts of the different income groups. We know where in the economic stratum, we have different income groups. We are not all of the same income. Some people are wealthy, they are up there. There are some people in the middle class, and then there are people on the below. So we evaluate. We use different data sets, administrative from URA, and some from census and surveys from Uganda Bureau of Statistics to collect this information, and we analyze it and see the impact of taxation. But broadly, if you looked at the last Uganda National Household Survey, which was released like 2 weeks ago, it shows Uganda's poverty has gone down to 16%. Yeah, the poor people in Uganda are just 16%. If we do 16% of 48 million, that's about let's say less than 2 million, less than 3 million. 2 million maybe is on the lower side. Less than 3 million Ugandans are below poverty. So it shows that, I'm not saying this is the only, I'm not attributing this to the tax system, but tax system is certainly part of it, part of that reduction in poverty. There are other development programs which the government has implemented: PDM, Emyoga, Entadekwa, Plan for Modernization of Agriculture, UWEP, YLP, so many other programs which have been implemented since 1986. There are so many which can brag about this 16% poverty rate. But certainly the tax system is also a big contributor to this, because VAT and excess duty affects, can counteract all these policies, can rewrite all these policies if they were really very high and onerous to the household and or to the citizen or to businesses. Okay. Yeah. Yeah, so but there is scope for improvement. We know we can do much better in terms of improving the welfare of Ugandans, but also collecting enough revenue to deliver on our aspirations, but also to deliver on our social programs such as education and health.
Okay. Yeah. So also, last but not least, as we were winding up, what are some of the measures that have been put in place to ensure that you are going to ensure fairness, accountability, and transparency in administering these tax measures, and that the taxpayer is protected during the process of implementation?
Yes, the attributes you have mentioned: fairness, transparency, accountability, efficiency is another one I would introduce. It's part of that package. The characteristics of a good tax system. We have tried our level best to ensure that our tax rates, our tax policy, the way the tax policy is administered does not affect the citizen or give advantage to some citizens and leave others behind. As you can see, we have responded to the lower segments of the business stratum by providing a 3-year tax holiday, even in the environment that it could promote a mutation. We have taken that risk, although I've told you we have put in measures to ensure that if at all it happens, the rate is small. But as you can see, we are trying to balance out, because we have other exemptions for strategic investors. These are what you would say are bigger pocketed investors. But now we have provided one for the ones you would say are small, medium enterprise. We have provided a relief in terms of a tax penalty waiver. Again, this ensures that there's equity and fairness, and ensures that there's efficiency in the economy. If someone is struggling to pay, there's no need to burden them with payment of interest. Even though there's a lot of evidence out there that waivers can incentivize bad behavior, because people will keep on expecting it every other time. Yeah, so we have done that. We also conduct regular studies. We have also come up with a zero tolerance for corruption at Uganda Revenue Authority, a policy which is being implemented very well by the Commissioner General. However, as I will say also, there's a scope for improvement. I'm not saying we are perfect. There's a lot of things we can improve, and we are working in improving them. And we will need much more to interact much more with our other stakeholders to ensure that we improve and we do much better. We are not 100%. Yeah, we have a lot we can do much better.
So just in a few seconds, could you just give us your closing remarks to the Ugandans who are watching us tonight?
Yes. Yeah, my parting shot is the tax measures for this year come bearing a gift to the citizens of this country. One is a 3-year tax holiday for small, medium enterprises. The second one is the waiver on penalties from 2024 to 2026. The third is the annulment of stamp duty for registering of memorandum of understanding and agreements. those are goodies which the government has provided for you, the taxpayer. Please take advantage of them. Then we have not imposed any consumption tax this financial year, apart from a modest adjustment in the excise duty on tobacco and alcohol to respond to inflationary pressure on the prices, but also to address the health externalities which come with consumption of these excisable products. Thank you, viewers.
That is well said from Mr. Paul Lakuma, the taxi advisor from Ministry of Finance, Planning and Economic Development. And now that is it for now. From the Financial Eye with me, Jackie Lingla. As always, stay tuned on Race TV. Till next time, every Monday at 8 p.m. to 9 p.m. Have a very good evening.
The Financial Eye, making finance clear. No complicated terms, just the economy explained.